Joining us now to discuss, Lisa Ellis, Senior Equity Analyst at MoffettNathanson. Lisa, it's good to have you here. How much exposure do these companies really have to the region?
For Visa and MasterCard, it's 4% of revenues. And so that revenue is literally just gone as of later this week when they complete the suspension. For PayPal and American Express, it's much lower, like under 1%. So it's much more nominal for those companies.
How difficult of a decision was this for them? So for some companies and industries, it's been easier to pull out of Russia completely. P&G, for instance, though, said it has to continue to supply Russians with hygiene products and basics. It just won't invest in that country. What was the decision like here for these credit card companies?
Yeah, it was challenging. I mean, I spoke with both companies today after they made the decision yesterday. They've operated in Russia for 25 years. They have employees there. They have operations there. You know, they've supported the local economies. So it wasn't an easy decision. However, it became evident over the weekend that they were sort of becoming a pawn, a push-pull player, and most likely they were going to be required to shut down one way or the other, either by Russia or through sanctions, elevating sanctions. So they decided to make the proactive decision to go ahead and suspend operations so that they could do it in an orderly fashion and unwind things in a much more orderly fashion.
So we saw it reflected in the stocks today, Lisa. But between that and the exposure to Europe, which is going to feel this a lot harder as far as the economic impact than the U.S., how much is factored already into these stocks?
Yeah, I mean, already we're now starting. I think we're past just seeing the direct impact of the Russia suspension. And what we're starting to see impacting the stocks is an expectation that we'll see a broader macroeconomic slowdown. These are, of course, very names that are very much tied just to consumer spending and to the overall economy. And if we do see that recovery slow down, and particularly that recovery around travel and entertainment and discretionary spending, that'll mean, I think we're starting to see that reflected in the stocks because it'll just be another blow to these poor payments companies that have taken a beating over the last 2 years.
So given all these headwinds, which ones, if any, do you like right now?
I mean, we still love Visa, MasterCard. This is a difficult period we have to get through. But, putting that in the broader context, these are companies who will still benefit from the recovery coming off of the pandemic elsewhere in the world, where we still haven't seen the recovery in things like travel and discretionary spending, which prior to the pandemic was almost 25% of their revenues and is still down 20-30%. That's the big reason why we still like the Visa, MasterCard, Amexes because we've still got that piece coming in. But no question that this situation and the severity of it, puts a dampers that a bit over the next, few months, at least until we see how this evolves.